Deepak Fertilizers. Sailesh, good morning. Thank you for joining us. 87% of your total profit came from the chemical division. What is the growth guidance for the chemical division going forward? Uh, can you just be more descriptive? Because that is now almost 87 to 90% of the business.
Yes, it is. So just at the outset, if I might share that our Q1 turnover crossed 3,000 crores, which is a 59% jump over the last quarter, last year. And the profits jumped by another 233% over last year. And it is indeed, you're right that 87% of our total profits came from the chemical segment. So to that degree, that is what is now very strongly representing Deepak Fertilizer. So fundamentally, what we saw was three things helping. One that we were seeing was that once again, it is very strongly indicated that all our three businesses are beautifully aligned with the India growth story. And the connect with mining, infrastructure, the China shift, all of it is certainly helping the chemical sector in Deepak Fertilizer. The second is that the results have also confirmed the strong operational efficiency, supply chain management that we have been at it despite the COVID years. And the third and the most important thing is a strategic shift that we have had from a commodity orientation to a more solution-oriented specialization that we have brought in as a new strategy for all our three businesses. So all that is now kicking in.
So can you broadly tell us what is happening to the TAN prices, because that's where the cooling off is happening?
Yes, so of course the TAN prices had risen, and that aspect of it has an impact of the overall global scenario, Russia-Ukraine war. And we are seeing a certain degree of mellowing down that will happen, a certain degree of mellowing down that generally comes in the monsoon season for the mining sector. But having said that, we are also looking at the raw material prices to also sober down, the ammonia prices. And somewhere we are seeing that the shift that we have brought in from just selling products to actually focusing on mining solutions, that is going to hold on a very good steam as we look at the rest of the year pan out.
Right. So for fertilizers, the segmental profit dipped by about 14% as we understand. Even the margins were impacted by adverse raw material prices. Do you expect margin pressure to continue ahead? Because, now natural gas prices have also risen off late.
Sure. So what we are finding is that monsoons are good now all over. So from a demand perspective, we don't expect any problem. But, somewhere along the way the global prices have shot up, that is something which we are waiting for it to sober down. Having said that, what is helping us in our fertilizer business also is basically somewhere the shift from the commodity NPK to crop-specific NPKs, what we call as crop tech. And this is where we are looking at focusing on cotton-specific, sugarcane-specific, fruits and vegetables specific. And that is where, in addition to the NPKs, we are adding micronutrients, which will be substantially helping the yields and, of course, the quality of the produce. That is something which we are finding as a very positive traction emerging for the fertilizer sector.
Good morning. Now, what we've seen the global prices coming off. There are many that believe that will the government cut back on the urea subsidy that it recently hiked by nearly 60%. Is that a fear? And then what can it mean for the entire sector and a company like yours?
So, of course, we are not in the urea sector. We are in the NPK sector, but it could impact similarly. Somewhere along, even if the government cuts back the subsidies, as long as it helps maintain a level playing field for the MRPs, we are quite comfortable. And in fact, the more it is market determined, the more we will get value for the superior fertilizers, the crop specific fertilizers that we are bringing in. So we are looking at it positively.
Okay, because there were also, of course, reports about how for the NPK segment, certain payments were not being made as per schedule and on time and have been delayed. So let's see how all of that pans out. Now, you're talking to us about new segmental growth as well and new areas that you're looking at. But when will these products hit the market?
So what we are coming up is two major project capital outlays. One is with a capital outlay of around 4,300 crores. We are setting up our ammonia facility. Ammonia is a raw material for all the three segments of our businesses. And that is something which we expect to kick in the first quarter of FY24 itself. Ammonia is going to be bringing in almost 25,000 crores worth of Atmanirbhar or import substitution over the next 10 years. And it will also reduce the carbon footprint in a substantial manner. So that is something which is coming in. The second project that we have taken up with an investment of around 2,200 crores is one more additional capacity of 10, riding on this huge demand for coal, cement, limestone, infrastructure. And that is something that is giving a very positive traction. So that project is something that will kick in the second half of 24. And both are quite in line with what we have been doing over the last 40 years.
Now, let's understand the dynamics about the big picture which are at play. You got a energy crisis in Europe, you got a recessionary scenario in China, you got India where raw material prices have been volatile. So what is in store from a macro standpoint? When you speak to your customers, when you speak to your suppliers, are they ready to give you a clear picture, a crisp opinion about business both on the demand side, on the supply side?
Sure. So it's a very good question. And as I had explained, we are beautifully aligned with the India growth story. And that is something that is giving us very positive tailwinds. So as India grows, for its power needs, it needs coal. For its real estate, it needs cement. And for its infrastructure, it needs all the infrastructure support. All the three are beautifully aligned with our mining chemicals that we manufacture. So the demand traction is very positive. Even in case of pharma chemicals that we make or feedstock chemicals that we make, which go into specialty chemicals, that is getting a very positive traction from the China plus shift that is happening. And on the fertilizer front, very clearly we are seeing that as again the mid-income group grows, the need of fruits, vegetables, quality produce is also something that is going to become a natural alignment. So all the three businesses enjoy this beautiful alignment with the India growth story. That is giving us a very positive traction.
All right, sir. Appreciate your time. Thank you for joining us and good luck going forward. Your stock has been an immense wealth creator, so I'm sure shareholders are extremely happy with the kind of wealth